Hey guys, it's Peter Cunha and David Baum with Cross Country Mortgage, and I'm here with Real Broker. We want to do something that a lot of people have been asking me about, Dave, which is a lot of people have said to me, "Hey, I'm ready to sell or buy a home, but I'm just waiting for interest rates to go down." And what I've kind of been telling them is, where was the peak of the market? Plus seven, plus eight.
Well, I mean, the 10-year treasury, right, back in second, third quarter last year, the height, like we cracked 5.0 on the 10-year treasury, which got really ugly. I mean, rates were, even like the mid to upper eights for a short period of time. Like it
So,
definitely got brutal at that point.
so, so
However,
So Dave, let
yeah,
me interrupt you for 1 second there. And I
yeah,
think that this is where there's a lot of confusion, right?
yeah.
People look at the Fed funds rate, and when they hear that the government's going to reduce interest rates or raise interest rates, what is the actual correlation? Because you mentioned the 10-year rate, and
Yeah.
people,
Okay. So, I mean, interest rates there's many different factors, but two good key factors that people look at are MBS, which are like the mortgage-backed securities, and then also the 10-year treasury yield, right? And as the Fed is talking about trying to reduce, how you're saying the Fed funds rate or, that kind of thing. So basically, if they're going to potentially drop 100 to 150 basis points by the end of the year. There is never going to be anything too drastic. It takes a lot longer for rates to come down than they can go up, right? That's the important thing we have to think about. Number two, if we're going to drop 100 to 150 basis points, that does not mean that interest rates are going to drop by 1 to 1.5%, right? That just means if that comes down, it might mean on a rate perspective, maybe a half to 5/8% in rate potentially, but definitely not like, rate for rate. If it's, 100 basis points, which was almost like 1%, does not mean the rate's going to drop by 1%. It's going to take longer. Obviously, the first quarter is still going to continue to be volatile. We had a nice little run the end of the fourth quarter last year that 10-year treasury went from over 5, it dipped below 4. And then right now, the last couple weeks, it's been going in the wrong direction. It's back to like 4.10. So it's above some key technical levels right now. And it's just they're not dropping as fast as people would hope. It's going to happen, but it's probably more second, third, fourth quarter this year than first quarter. Volatility is going to continue. But listen, rates are still a lot better than where they were. Yes, there's better days ahead in the next couple of years, but for right now, listen, interest rates on average, I think Freddie Mac just published like they're in the high sixes right now, right? Now for everybody, some might be a little bit better, some might be a little bit worse. Depends on credit score, down payment, loan to value, debt to income ratios, all that kind of stuff. But we're in a much better place overall than where we were at the peaks, right, of 2023, which were 20 plus year peaks, on rates. So we're in a good spot, but we've got a long way to recover. It's not
right.
going to be quick.
So Dave, for all those people that are on the sidelines, right? I just let's if I can sum up with what you're kind of saying, rates
Yeah,
will get better, but for those people that are waiting for the government to actually drop those rates, there's a correlation that's tied to what they're charging, but the mortgage rate industry kind of has their forecasts, and that's what the mortgage rate is really based on is future predictions, right? So if we say that the market is expecting 4 rate cuts, that's where mortgage rates are going to go, kind of with a glimpse of there's 4 rate cuts, whether it's 25 basis points, 50 basis points,
yeah. It's also regarding prime though, too, right? If they're going to cut that, so prime is maybe like 8.5, 8.25-ish right now. So when they talk about dropping, it's not going to be immediate on mortgage rates. It's going to be a little bit more you might see on credit card rates too, line of credit rates, auto rates too. All of that stuff is going to potentially see a little bit of drop too, potentially more so than before mortgage rates will really drop. They're all kind of related, but yet mortgage rates itself, for like, we've had this talk and, we do get this a lot, right? Well, I want to wait until rates are 4, right? And I may not want to sell, or, I just think that it's going to be in that position. I might be better off because I can't really afford where it is. So, I think that that mentality, it's just going to be more difficult for them in the future. People that are buying now, they know they can refinance in the future. Yes, if they can qualify and get in, because home prices have still been on that. We talked about this before, right? That appreciation, it's not going up drastic, but in our market and area, Jersey Shore, especially between New York and Philly, it's still a good market. It's appreciating. Maybe, we might see in that like 3%, 4%, which is more common and typical. So as prices keep rising, if they're going to wait for rates to drop, they're still going to be paying more money when rates do drop, or if they can get in, right, at the price where it is, price point now, where home prices will rise, hypothetically. And then if rates drop and they can refinance and save money in the future, then they don't have to worry about, waiting. And they're just going to be paying more money for something in the future if they do wait. And I think that's the part that it's hard for people to understand, but they really just need to look at it. I mean, there's a lot of people that are, with rates where they are, we talked about this before when rates were under 3, the stats last year was like 70+% of people that had mortgages were below, 3%, 4%. That's starting to shift and change. Now that rates are not in the mid 8s, sellers are starting to, now that we're trying to get below 7, and as that keeps going more, there's going to be more sellers that are going to put their places on the market because, it's getting into a little bit more comfort range. They know that they're going to be able to refinance in the future, but at some point in time, you can't hold on to that house forever. People are outgrowing their places, right? They have to downsize. They're relocating for a job, for retirement, or anything of that nature. But as rates start to come down, like the stats that are out there, the percentages of people that have rates below 4 or 5, that is starting to shrink because those people are selling those houses.
Right,
So,
right. So, and again, it's just, there's people have been on the sidelines. They've had, again, if you have to move, you have to move. And what I mean by that is, whether you got relocated for your job and you're paying 3% interest rate now, and you're moving to, I don't know, Texas, let's say Austin, one of our buddies is helping you buy a house down there. As much as you want that 3% interest rate, you're going to have to let it go in order to move or relocate. That's kind of what we're talking about. You had a bachelor pad, you got married, and now you're moving into a bigger house, right? It's like, I'm not saying sell your house, but you're going to have to pay up a little bit in this market. Don't know if we'll ever see 3%. That was kind of, who
but it
knows?
took a 100-year pandemic, for rates to get that low.
So,
And
one of the things that I'm just kind of saying is a lot of people are looking for the headlines that the Fed dropped the rate. And what I'm saying is kind of let's talk to Dave, see where rates are today, versus, say, they change on the daily. So, and that's without the Fed doing anything.
mhm.
So I just want to make sure people are clear on this, because there's a lot of information that you just kind of gave people. And it's that if you're waiting for the Fed to drop rates, that might not, they could drop rates and your mortgage rate could actually go up because the mortgage industry was expecting a bigger drop. Uh,
Yeah, I mean, I do think by the end of the year, right? From if, we just had our company meeting too, and a lot of the forecasting that's out there, they're probably anticipating somewhere between, after all the cuts are said and done, granted, it is an election year, right? So we do anticipate, things probably progressing more in the later half of the year, right? Starting second quarter and forward and going after that. But they are anticipating a drop. So what does that mean? Do rates maybe get into the low sixes by the end of the year with no points, right? Maybe in the high fives if we're really lucky. You know, granted, obviously, I don't want to get into confusion because that's a whole other standpoint of discount points, but you know, they should be better at the end of the year. However, if prices keep continuing to rise, you know, people may spend more money on something by waiting, even if rates do drop a little bit, and they're not going to drop right away to 4%. You know, if anything, like I said, we're a couple years out probably before we can start to see that if the economy stabilizes, right, and we get past this inflation, you know, type thing. So,
Okay.
and recession, yeah, but the recession still has not kicked in, even based on what they're thinking, because the 10-year Treasury keeps bouncing in volatility and it's back to rising. So, you know, they still have not really got into that recession quite yet on what they were hoping for.
Right. So if you're currently looking for a house to purchase, get in touch with Dave. One of the things that they can do is certainly lock you into a good rate. And I think you guys offer a program where, even if we lock into a rate today, if prices improve, the rate improves, I should say, Dave will be able to help you out somehow.
Yeah,
So
we got a float down policy, a free float down policy within 15 days of closing. Obviously, by locking in, it protects you from a rate increase. If rates drop, you know, substantially or anything of that nature, we do have some options to work with during the process. So I go over all that on my buyer consultations and let everybody know everything that we've got. But we got a lot of unique stuff going on. You know, we're at a great company. Cross Country Mortgage, we were, you know, the number one distributor retail lender in the country and a top three lender in the country. Once again, after 2023, you know, help out as many people as we can. And yeah, just thanks for the opportunity to speak.
all right, no, Dave, I appreciate you. This is a complicated topic. I just don't think people are clear on what the correlation is. And again, if you have any questions, comment, DM, reach out to us. And Dave, what's the telephone number for you?
Best number to reach me is 732-853-4969.
This is Peter Cunha.
David.Baum at ccm.com. One of those two things.
All right, this is Peter Cunha, your New Jersey real estate giant. If I can help you with anything, please give me a shout. Thanks, Dave. Appreciate your time.
All right. Take care. Have a great day, everybody.